All right, guys, welcome back. I'm back with another video. Today I'm going to be talking about market structure. So in the last video the last video of the course that you guys watched before this video, well, you guys should have watched before this video was market structure. And basically in that video, I talked about the basics of market structure. I didn't really go into charts with it. I just kind of drew on my iPad, show you guys just like the main structure of it, the ups and downs of it. But in this video, I'm going to show you guys like what it looks like on charts. And I'm going to tell you guys right now, it's not gonna be perfect. The way I drew on the chart, that was like pretty much what it is generally, but it's not on the charts. You're not gonna see like it's not gonna be that easy. Because if it was that easy, we can do it all day. We can make profit off of that strategy all day. But so let's get into it. I'm gonna show you guys what happened. So say start with I guess what was a good pair this week? Let's see. All right. So you guys could probably see here EURUSD. Let me just so let me highlight the points out for you guys. So just remember we have we got the higher highs, higher lows. So on the left side of the chart, higher highs, higher low, because it's going up. So for example, this area of the chart is going up. So price is forming higher highs, higher lows, higher highs, higher lows. All right. On the right side of the chart, this end, we got lower highs, lower lows, lower highs, and so on and so on. Right. So just on the left side we have higher highs, the right side we have lows. So in this case, we're looking at a downtrend on EURUSD. So pretty much, as you can see, we have a higher high here, right there, right? And then once we have the higher high, price came down. And when price comes down, it broke the previous, what was it? Let me go from here, actually. That's our high. Price came below this zone, right? So the previous higher high. So this is the previous higher high. I'm gonna highlight this too. So pretty much this is the previous higher high. And then we have this higher high, right? So pretty much it's a higher low. All right, so higher high, higher low, higher high. After the moment that price on this side broke this higher high zone and came below it, look what it did. So let's say we have let's draw a trend line. So pretty much this black line, I'll consider it the neckline, the breaker structure. So pretty much what happened was price broke this area, retested that. So once it retested that, it forms that lower high. So when it forms that lower high, what's next? The lower low. So price then came down, and made this lower low right here, right? So you see what I'm saying? So pretty much on the left side, we have highs coming, structures going up. It's good. And usually what happens here is we're supposed to have a retest on this trend line and continuation of uptrend. But since price broke this area, it came back up to retest it and it formed that lower high, right? So once it formed that lower high, we know that the next move would be a lower low. So what happened in the next move? Happened in the next move, pretty much prices made a lower low right here. Right? So pretty much that's what market structure is. In the last video, I think, or a couple of videos ago, I'm not sure which video it was, but I mentioned that it's the same thing as supply and demand zone, right? Because look, let's say you have right here, this is a zone, right? You have that low zone. Price broke the zone. Sorry, no. This would be a zone. Here, right? Price broke the zone right there. So let's say zoom in. We have a broken zone right there because it cannot close above this area. So what happened when price closed above it? Came back down to retest that same zone. And the next target was over here. So I would have went long right there, or long right there. Stop loss like right below the zone. So 14 pips, and my TP would have been right there for 40 pips. So that's what happened there. So pretty much price came up, broke that zone, retested that zone, and continuation up to the next zone. And that's what happened. Once the supply zone got broken, right? So what happened after that was, you see how on this side, so usually when we have a supply zone, when price breaks it, well, when price is on top of it, over here, this would be your demand zone. But since price broke it, this now comes your supply zone, right? So what happened when price broke it? A new candle formed below this. And what I would have waited for was the retest, right? So the retest was right there. I would have shorted it right here. I have low drawdown, stop loss above that zone a little bit. And my TP would have been right, I think right here. My TP would have been right there. Nice 50 pip move, right? Because you have this whole zone over here, right? But my TP would have been right there. And that's pretty much what happens when one market, the structure breaks the trend. So pretty much it went from highs, now it's creating lows. So when price breaks the trend, and there, you could have entered right there. Or if you wanted to, you could have waited for price to really make a lower high, which was pretty much that same exact zone that we drew. It made a lower low right here. And there you made a lower high right there. And you could have entered right here again as well. You could have entered a short right here, right there. Price above that zone a little bit, 19 pips. After TP, it's seeing a spot right there. And boom, another 50 pips. So as I was saying, it's not that complicated. It's just, it's hard to find. Like when you're first starting off with the strategy, it's hard to find it. It's like with your eye, it's really hard to find. Like you gotta like really backtest and backtest and backtest. And I always tell people to always backtest, because the more you backtest, the more things you'll realize in the market, and the more like your mind will be like, what's the word? You're more like, it'll be easier to read the markets after, right? To say it like that. So pretty much that's what market structure is. So I'm gonna show you guys more examples of it with a clear chart this time, because that was kind of messy. So got some right here, I think. All right, this is cool. This is cool. All right, so what happened here? This would be your first zone. What's this? High. So right there, right? Because high pretty much prices at its highest point, and then from the high, price came down. Actually, no, it's a bad example. That's not it. That's not it. What's going on up here? I hear this is all right. It's not bad. This is not bad. So we got the higher high right here, right? This is the tip of the mountain, the higher high, tip of the mountain. So what happens when price we start high? Since we failed to respect this area right here, so I'm guessing this was your previous lower higher high, right? And then pretty much what happened on the right side, if you were to draw the demand zone across, you'll see that price broke this whole zone. So pretty much when price broke this whole zone, it came back up to retest right there on a lower high, right? And looking at this wouldn't be like the best entry for a sell, just because it didn't like close like within the zone. Guessing if I draw it up here, yeah, maybe, yeah, right there probably. But so that doesn't matter. But what I was saying was pretty much what happened was that was your previous higher high. Price came down to make the higher low, came back to make the higher high. So when price went back down to make the lower low right there, we came back up. We came back up to retest those highs right there. So once we retested those highs, this would be another sell opportunity. One, because first, you have a structure getting broken right there, and you get the retest, right? So when a structure gets broken, it's pretty much the neckline, it's pretty much like trend reversal. So trend reversal, now we're looking at sells, wait for the retest, and you sell it off. And pretty much your TP would be right there. Your TP always set to the previous like low, so right there. So right there's my TP. And after what happened when price broke, because market structure could continue forever, right? It could continue forever. The only way it'll stop working or stop continuing is when neckline appears. So pretty much this neckline right here, pretty much when a trend reversal appears, when price doesn't follow the market structure, then it starts reversing. But if it keeps respecting the lower high, it will keep coming down and down and down and down. So right here we have another example. We have lower low, lower high right there. Price came down, made a lower low right there. After when price made a lower high, it came like above this zone. Right, it respected the zone because price never closed above the zone. So respected this zone after continuation of down, right? So what happened here was same thing. If I were to draw a demand zone right here at the previous lower low, draw all the way across, price came down, broke it, retested it, I would enter a sell right here again, right? Enter a sell right there. My TP would have been probably in the zone right here, right? So what I'm looking for right now, I'm not about to die. What I'm looking for right now is pretty much my TP for sell would have been right here if it entered right there. So since price did not break through this and it just started rejecting off of it, that's just my first sign to get out the trade. Just get out this trade and just take your profits and just stop watching the pair, right? So stop looking for sells pretty much after this. So right here we have a clean break, a retest, clean break, retest, clean break, retest. And what happened here? A bunch of rejection candles, right? So pretty much when that happens is pretty much a sign of you just to get out the market and just stay safe. Don't trade. Pretty much what price is gonna do most of the time is just range, and that's what I did here. It's called a dead range. So this is like, how many pips is this? This is like a 9-10 pip range. So if you trade in this range, man, you would have lost a lot of money because it's just ranging, and you can't trade when a trend is ranging, right? You need some like volume, you need some like movement. So what happened here was price just started ranging, and after a bunch of other shit started happening, right? So yeah, so pretty much from here to here, you could have caught this whole move using market structure itself. If you were to hang on to this trade, this will be a nice 35 pip move, right? Because this is a 15-minute, you remember that? And also this is NZD CAD, so it moves very slow. So yeah, that's pretty much what market structure is. Let me show you guys one more example. All right. Let's see. All right, where draws across. Okay, cool. All right. So some of you guys may see this, and you guys may look at it like, oh yeah, it's a head and shoulders, right? So you know, if you guys know what head and shoulders is, it's pretty much just this. See, I don't use like this head and shoulders method that much, just because I look at it as market structure, right? And I'll show you guys why. So first, you have a left shoulder right here, and then what happens when you have left shoulder? You have a head, and after you have the right shoulder right here, you have the right shoulder, and then boom, something like this, right? And this would be an inverse head and shoulders, so pretty much price would just continuation and go up, maybe to like right here, this zone over here, right? That'll be my TP over here. So what happened when price came? Yeah, wait, yeah, sorry, I went too far. Yeah, so you have the left shoulder, you have the head, and the right shoulder. So if you guys look at this closely, you guys will notice that this is market structure. So pretty much your left shoulder, in this case, this will be your lower low. Your lower low, right? Then when it comes up to make that right shoulder, right neckline body shoulder, this would be called your lower high, lower low again. Okay, so high, and then lower low again once over here, right? Lower low, and then what happens here was price made a lower high. Actually, yeah. Just tell it. So I drew out the points. Now let's clear it. All right, so those are the points, right? So pretty much lower low, lower high, price gave now made a lower low. And since this area right here was not respected, like this neckline was not respected, this would be called like, this is the tip of the mountain, right? This is the tip of the mountain, like reverse. This is the tip of the mountain. Pretty much from the tip of the mountain, price broke the zone. So it's just continuation of a sell. Of a buy, sorry, continuation of a buy. And the same way price retests the zone over here, it's the same lower high being made. So you have your higher high over here. So when price made a lower low, it made a higher high, right? Just because it closed, it came up above this lower high zone. So this would be called a higher high, right? So price made a higher high. After when price retests that zone, this would be now called a higher low. Right? So this would be now called your higher low. And the higher low is usually where I'll answer for buys, right? Because that's like the retest area. So pretty much lower low, lower high, lower low, lower high, lower low, higher low. And then as long as price finishes above this zone, like above this zone right here, and continuation of uptrend, we should be good to go. And as you can see, this candle just spiked up. It didn't like really have to test this or anything, it just started spiking up. So that's on that side. So from here, if you look into the right side, what's happening today, right now, is we have prices trying to show some slowdown. So pretty much we have a lower high. After we have a lower high right here, this will be your lower high. Sorry, no, your higher low. This will be your higher low. And then this is right here is your higher high, which is the tip of the mountain. Tip of the mountain. What I'll do here is I'll usually draw my neckline. So pretty much from here. So pretty much as long as price closes below here, it should be a continuation of a downtrend. But if price were to just retest off this zone right here and continuation of uptrend, then price will continue to go up. But since price broke this area and retested it, should be continuation of a downtrend. And look what's happening right here. Price came down, coming back up to retest. Maybe it's gonna retest this zone over here. Because if it retests this zone, this lower low on this side over here, then price should continue to fall down to this zone, right? But if we were to close above here, let's say candle comes up to here, then we might come. Then that pretty much means that the structure is broken, right? So the downside structure is broken. We may be looking at buys again. But as of right now, looking at the 1 hour time frame, this is looking like we're gonna make a lower high and then a continuation of a lower low down here. All right. So that's pretty much it for market structure. Hope you guys enjoyed the video. Just take it easy and catch those pips.